Hey guys, it's Matt. So this video is a bonus video for those of you guys that have watched my webinar. So first of all, thank you for watching my webinar. And this is just like a little bonus thing that I want to give you guys to help you guys get inside the head of your IRA investor, okay? Maybe handle some of the frequently asked questions they may have, maybe just help you better address some concerns and questions they may have, okay? So the first and foremost thing that you're going to have to do is you're going to go to them and say, hey, listen, what I don't want you to do is you go to them and say, hey, let's get you into a self-directed IRA and you can put your self-directed IRA in my real estate deals. You're speaking in French to them. They don't understand what a self-directed IRA is. Right? You're going to have to explain that. So that's number one, is like, what is a self-directed IRA for, you know, in your language to them, right? What is that? Okay? What you may want to say is something super simple like, hey, Uncle Bob or Uncle Charlie or a person that I went to high school with, whatever it is, do you happen to know that you can take your retirement account and invest it in things outside the stock market? That you can take your retirement account and invest it in real estate? You can loan it on real estate deals? As long as you don't work for that company anymore that gave you that retirement account, as long as it's from a retirement account from a former company, that you can invest that in anything you want, really. Did you know that? That's how you want to do it. And just be excited about, hey, because it's pretty exciting actually that they can make the money from somewhere else besides Wall Street. So be excited about it. Right? And they're going to say, that's interesting. How do you do that? And that's when you start explaining the magic of self-directed IRAs. That's when you start talking about, well, your former retirement account is an IRA. It's this. You know, it's an independent retirement account, individual retirement account. That's what it is. That's your 401k was a 401k, right? Right? Now it's an IRA. And because it's an IRA, you can then take that IRA, the law says you can take this and roll it over to a custodian, right? This 401k becomes an IRA, okay? Automatically, as soon as they have to leave the job, they're going to leave the JOB and then it becomes an IRA, okay? That's just what it becomes. Because it's no longer 401ks or retirement program that's provided by your current employer. Once that employer is not the current employer anymore, then it becomes an IRA, right? Once it's an IRA, they then have to roll it to a custodian, and that makes it a self-directed IRA, okay? Now, the custodian is someone who really just holds the money and holds the account for them, and for a small fee, directs the money where they, self-directed, where they want it to go. They can loan it in real estate, they can invest it as equity in real estate, they can, you know, buy property itself, they can buy like bars of gold, they can buy all kinds of cool stuff that you can't do as a 401k. You can't do any of that stuff here. You can't do a lot. The 401ks pretty much need to be invested in stocks and mostly in mutual funds, right? Once it's an IRA, it can become a self-directed IRA, it can do whatever you want it to do through this custodian. Now, on BiggerPockets, you can get access to some custodians that BiggerPockets has relationships with. There's a ton of custodians outside of that you can check out as well. But one of the BiggerPockets member perks, go to biggerpockets.com/perks, and there are a bunch of custodians that BiggerPockets has relationships with, and also discounts you can get for custodians, okay? Or you can put a post in the forums and vet out, hey, which custodian do you guys use, okay? But you don't start here in conversation with your potential money partners and with people that have retirement accounts. You start here. Say, hey, do you know that your old 401k could become this? Okay? That's number one, is inside of the head of them, because they don't know what you know. They've never heard of self-directed IRA. They've heard of this, of a 401k. And they think that their 401k can still be what it is, which is just invested in stocks, which is why the biggest question that they're going to ask you up front is this legal, right? Is it legal? Am I going to have to do all kind of, they're probably going to further brow a little bit like this and say, that sounds a little funky, because they've never heard of it. You know, like as I've said in the webinar, only a few % of IRAs or any type of retirement account are invested in anything outside of Wall Street. So odds are they've never heard of any of this. And so they're going to say, that sounds a little fishy. And so you're going to have to squash the fishy smell that they may have on this immediately and say, hey, listen, it's not. It's legal. A lot of people do this. Here's websites of companies that do this, and here's people, including this guy Matt, my buddy Matt on YouTube, here's his YouTube channel, or here's his BiggerPockets feeds and stuff like that talk a lot about IRAs investing in real estate. Or hey, here's BiggerPockets.com, and a lot of people on there talk about it as well. So you have to expose them to BiggerPockets and other vehicles out there that talk about this, that say, hey, listen, it's actually more common than you think it is, okay? So yes, if they start to further brow, it is legal. Okay, the next thing we're going to know is, what are the tax implications? Right? Well, you're going to go and take my IRA and put it into a real estate flip or into an apartment building deal or whatever it is. Am I going to have to pay tax on that money? Well, yeah, address that. And this is where your CPA steps in and gives you some advice on that one. But most likely, the tax implication is going to be zero. Okay? And if your CPA does the right job, he can get you out of things like, UBIT, which is unrecognized business income tax and stuff like that. Just there's taxes that can show up for self-directed IRAs investing in things that normally generate a tax burden. You can avoid that if your CPA knows how to do it, okay? So if you got the right accountant, the tax burden is zero, okay? So there is no tax they pay on the money until they take it out, right? And that enables them to take advantage of things I talked about in the webinar, like the Rule of 72, compounded interest, all the things that make self-directed IRAs awesome vehicles for them to invest, right, are available to them at a 0% tax burden, because they can take all the money and roll it back in and not have to worry about paying any tax at all, okay? So this will be the first questions. Is it legal? Even if they don't say it, their thought in their little head is going to be, not sure if this is legal because I've never heard of it. So you need to address this, you need to address the tax question. Those are the first two questions that they're going to have. The next thing they're going to know is, whether they want to know this or not, you're going to need to address this, is what is the process? Okay, well, you went through this. Okay, the first part of the process is you take this thing that was a 401k, is now an IRA because they left the job. It gets rolled to a custodian, now it's a self-directed IRA, okay? So then you're going to take them through the rest of the process and say, okay, well, I've got this thing over here and this is called a deal, okay? And your IRA money wants to be involved in this deal in some form or fashion, okay? So to do that, let's say it's a loan, okay? If it's a loan in the deal, the process looks like this. The deal provider, I'm going to generate the loan documents, which is a mortgage and a note. Your IRA custodian is going to review and approve those notes and the mortgage document and say, yes, that looks good, and we approve that, and we will fund that deal based on these documents, because this is part of what they do. They make sure that this money goes into things that are legitimate, and they review documents, and then once they've reviewed and approved the documents, and they release the funds, okay? So you, the deal provider, provide these documents to them, and then they approve it, and then the money goes into the deal as a loan. If it's equity, okay, then there's most likely going to be an operating agreement or a subscription agreement. Most likely both, the operating agreement and subscription agreement, and maybe a PPM, and maybe some other documents that your attorney that generated the equity agreement generated for them to go through. Same thing. The custodian is going to review this stuff. They might have some other paperwork that they have to fill out on their side. There's something called a direction of investment, or a DOI, that a lot of times the custodians require that the cash provider fill out to put their money into the deal. Either way, just there's paperwork, and that's the main part of the process. You need to be versed on the paperwork that they're going to have to go through to release this fund to here. Okay. The bottom line is, if they have a 401k or an IRA, it's a very hands-off investment. Their financial planner will just keep the money moving in these mutual funds and things like that. If it's a self-directed IRA, it's less hands-off. The self is them. Okay, it's not you. It's you're offering recommendations. You're offering opportunities for them to put their money into. But at the bottom line, they are the one that are directing their money into places. So there is some activity, some hands-on involvement of them reviewing these documents and forwarding them over and being in the middle of this. But the benefit that they get is alternative investments for them to build their wealth in their retirement account, right? So you need to make sure they understand that this is going to take some doing for you. This isn't just push a button and the money goes and it earns you money forever, and then when you retire you get to come get it. there is some action that it takes for them to build their wealth through their retirement account in a self-directed IRA. Okay, so that's the process. And then when the deal is done with the money, the deal returns the money back to the custodian, and it's in the IRA, and you can keep circulating this over and over and over again, and do the Rule 72 and all kinds of fun stuff like that. Okay, the last thing they may ask you is when they get the hang of this and they realize, this is pretty cool, especially if you're dealing with somebody, and this is a whole other thing, but if you're dealing with somebody who's active on BiggerPockets or is an active real estate investor, or someone that's a business owner, whatever it is, that's reading all this and says, oh geez, this is really cool. I wonder if I could take my IRA money and use it myself. And that's what they're going to do. Some folks that, if you want to get inside their head, they're going to see how cool this is and how awesome this is that you're able to tap into retirement accounts and put it to work. And they may even see how much money they have sitting in their retirement account, and they're like, man, I want to use that money on my own. Okay? You got to let them know right up front, hey, listen, unfortunately, because of the regulations, you can't use the money yourself. You let them know that. And you also can't, unfortunately, do a project that involves your children or your parents or your grandparents or your great-grandparents or your kids or your great-grandkids. Anybody that's directly above or directly below you in a family tree, you can't work with IRA investments. It's just they're called disqualified parties. You can't do it. So most likely, again, once they catch on to this, they're going to start to ask the questions, why can't I just do it with my own money? Okay, you got to let them know, listen, you're a disqualified party. It has to be an arm's length transaction. The IRS isn't going to be so happy if they find out about that, And this goes for you guys too that are watching this, and I believe I brought it up in the webinar, but in case I didn't, I'm just telling you again, you cannot put your own money into your real estate transactions unless you go jump through a bunch of hoops and do things that are a little dicey in that, but you definitely can't do it as clean as this. Okay, so that's that. I hope this helps. And again, I want to thank you guys for watching my webinar, and feel free to share this video with other folks, that maybe people that are considering doing some work with you for the IRAs, because my goal is to help you guys build your business by helping other people build their wealth in their retirement accounts, because I firmly believe that we as real estate investors, and I said this in the webinar, that we as real estate investors can help people reach their financial goals through them helping us reach ours in our business. It is a symbiotic win-win relationship, okay? A ton more of this is in my book, Raising Private Capital, so be sure to check that out on BiggerPockets.com too. Thank you for watching, guys, and as I always say on my YouTube channel, have a great and profitable week.